The next subtopic that we are going to discuss is stakeholders. Stakeholders of a business entity. So whatever the form of the business is, it can be sole proprietorship, it can be either a partnership or a company, whatever the form is, these stakeholders are there around the business, right? So who are the stakeholders of a company? Or not a company, not stakeholders of a business entity. Who are the stakeholders? Stakeholders means who has some interest in with regard of the business, right? Who has some interest with regard to business, who are keen on the business. So who are the stakeholders of a company or of a partnership or a sole proprietorship, whatever the form is, these stakeholders are common. Who are the stakeholders? Who are the parties? Who are the parties who are very keen on the business activities, who are very keen on or who are interested in the business activities of the particular business? The main party is owners, shareholders, owners, partners, shareholders, right? The people who provide funds to the business. Why they are keen on the business activities? Now, the main reason is they have invested money, their own money in the business. So they should be, they have the risk now. As the owners, as the shareholders, they have the risk. That's why they are very keen on the business activities, right? Then management, then employees, then creditors or financial institutions, right? Then suppliers who provide materials to the business, then government, all of them are stakeholders, right? Now we'll take one by one and see, right? We'll see why they are very keen on the business, right? Now guys, these stakeholders, now let's say this way, let me go back to that slide. Now owners are very keen on the business activities because they have invested their money now. Why management is very keen on the business? Now they are managing owners' funds now. So if they do it well, if they perform well, if they make correct decisions, the business will go in the right direction. Otherwise, definitely business will fail. And it will impact on their job as well, right? It will impact on the business entity's success. It will impact on their own job, right? So that's why management is very interested or very keen on the business activities, right? That's why they are looking at the business entity, right? Why employees are very keen on the business activities? Now, if a company or any business make profits, employees should be very happy. Why? When they make profits, guys, employees, the salaries of employees will go up, no? Go up. Salaries of employees will increase. If the company incur losses, there is low probability for salaries to be increased. No? That's why they are very keen on the business activities. Why financial institutions like banks are interested on the business? The reason is bank provides loans to the business, so they are looking at the business. Why? If they incur losses, they won't be able to settle the loan. Then bank will come to a situation where they are struggling to get it settled, right? That's why they are very keen on the business activity, particular business activities, right? Why suppliers are very keen on business activities? Now, suppliers provide the materials to particular big business. If that business becomes successful, they can definitely continue with that supplier. Then supplier's business also will succeed. What happens if the other business fails? They cannot continue. They cannot continue the relationship with the particular supplier, right? Then that relationship will end up. That's why suppliers are very keen on the business activities. Why government is very keen on the business activities? If the company make profits, they can be charged for taxation, right? They can collect taxes from the company. If the business incur losses, they cannot collect taxes from that company. So they are very keen on the business activity. They are looking at the company and they see whether they can make losses, make profits, and pay taxes to the government, right? Okay. Now you can see that all of the stakeholders are very keen on the business activities, right? They depend on the business. They depend on the business, right? They depend on the business. Now, these users of information or stakeholders, right, need information, right? They need information to make decisions. Why? To make decisions. Why? Now, let's say you invested in a company as a shareholder. Now, you are a shareholder of the company. You have invested money in the particular company. Now, you are a shareholder, owner, right? Now that business make losses, that business incur losses, right? How can you know that they incur losses? The company needs to provide something, no? Provide a report or something, and with that report, in that report, they should mention whether they are incurring losses or profits, right? We are having this kind of revenue, this much of revenue, we are having this much of expenditure, and this is our profit. They need to show that way. Then from that report, you can get whether they are incurring losses or make profits, right? Then you can make a decision. What? Whether you keep your money in that company or taking it out and invest in another company. That is your decision. But for that decision to be made, you need information from the side of the business, no? What information? Information with regard to the revenue, information with regard to the expenditure, information with regard to the profit of the business. You need those information to make that decision, whether you are going to whether you are going to depend on that business furthermore, or are you going to take money from that business and invest in another company, right? Are you going to sell the shares of that company and buy shares of another company? That is your decision as the shareholder. For you to make that decision, you need information about revenue, expenditure, income, profits of that business from the side of the business. Someone needs to provide those information to you, right? So stakeholders, or we can say users of information, they are the people who are going to use the and do is making decisions. So accordingly, guys, you as a shareholder, you need information from the business to make that decision, no? So stakeholders need information from the side of the business to make decisions like that. So I talked about only about shareholders. We can take even management, employees, government, suppliers, right? Now suppliers need information of your business, right? Why? To make decisions like what? Whether we are going to keep our relationship with the particular business, or are we going to continue providing materials to the particular business, or are we going to cease that relationship? That kind of decisions has to be made with the use of the information, right? So it is the responsibility of the business to provide information to the stakeholders to make decisions, right? Now guys, why these stakeholders need information, right? Let me take one by one. Managers, why do they need information? They need to make decisions like what? See, they need information to do what? These are day-to-day decision makers. Managers are the day-to-day decision makers. They need to know how well the business is performing financially and about the financial position of the business. Managers need to know the financial position of the business. That's why they need information, right? Why owners need information? These are the investors who have entrusted their money to the company and expect something in return, right? They invested their money in the business. They expect a return now, right? So they are very keen on the information of the business. They need information of the business, right? They need to know whether the business is running properly, right? They need to know whether managers are managing their resources properly. Why employees are keen on business? Why employees need information? Employees are employees and their representatives are interested in information about the stability and profitability of their employees to assess their ability to provide remuneration. Right? Employees need to see whether the company has the ability, whether the company has the ability to remunerate them, to compensate them. Right? Then lenders or creditors or financial institutions like banks, right? They provide finance on a short term as well as long term basis. They provide loans, no? So they are interested in information that enables them to determine whether their loans and related interest will be paid, right? Will be paid. So they need to know whether the company is in a position to settle the loan amount, right? That's why they need information. Why suppliers need information? Suppliers of goods and services are interested in information that enables them to decide whether to sell to the entity and to determine whether amounts owing to them will be paid when due. Right? Government, as I told you, they require information for government policies, including regulation of businesses, assessment and collection of taxes from businesses based on profits, basis of national income and economic studies. So they need to see whether the companies are making profits or losses, right? Depending on that, they can see whether they are going to collect taxes from the company or not, right? Right. So what is the role of the accounting in this process? This is the role of the accounting. Our subject is accounting. So in this process, what is the role of accounting? Now, here you have stakeholders. They need information from the side of the business, right? And they need information to make decisions, right? Decision making. Now, who provides this information? The business should provide this information, right? How? This is where accounting comes to the context, guys. The role of accounting is to provide this information to the stakeholders to make decisions. Again. The role of accounting is to provide information to whom? To stakeholders or users of information. You better use the term users of information. They are the people who use information, users of information, right? So the role of accounting is to provide information to the users of information or stakeholders to do what? To make decisions. That is the role of accounting. So throughout this subject, throughout all the lessons that you are going to learn in this subject, all you are going to learn is how to provide information in different ways to stakeholders so that they can make decisions. We will be providing different types of information through accounting, right? In the name of accounting, right? This is the simplest way of explaining the role of accounting, right? So accordingly, the role of accounting, right? The role of accounting is what? Is providing information about a business entity to users of the information to make decisions. Okay, now simple. Now the last subtopic that we have discussed is the branches of accounting. Branches of accounting. Now you know the role of accounting now. Now there are two branches in accounting. Those two branches are financial accounting and management accounting. Right? Now in your curriculum there are two segments. One segment is for financial accounting. The next segment is for what? Management accounting. Right? Management accounting. So these are the two segments. So what is the purpose of financial accounting? Now the purpose of accounting or the role of accounting is to provide information to the users of information, right? Or stakeholders to make decisions. So what makes the difference between financial accounting and management accounting? These two branches. The target parties make the difference between these two branches. Now, Anyway, whatever the branch is, the role of accounting is to provide information to stakeholders now, right? Financial accounting provide information to a specific set of stakeholders. Management accounting provide information to a specific set of stakeholders. That is what that makes the difference between these two branches, right? These two branches. So let me take financial accounting first. Financial accounting first, right? Now guys, the role of financial accounting is to provide information to stakeholders, yes, right, but not to everyone. The special purpose, the main purpose of financial accounting is to provide information to the people or the stakeholders who have provided funds to the business. Okay. Now, who are the people who provide funds to the business? Shareholders, banks, right? Other creditors, other financial institutions. These are the people who provide funds to the business. No? So, the role of financial accounting is to provide information to those people, those parties, right? So, simply we can say the role of financial accounting is to provide information to external parties, especially those who provide funds to the business, right? Now, even though I told external parties, now it doesn't mean that internal management, the managers cannot use financial accounting reports. I didn't mean that. They can use, but the main intention of financial accounting is to provide information to whom? Provide information to the external parties like shareholders, banks, financial institutions, creditors, such people, because they are the people who provided funds to the business. Now I told, moment ago I told, shareholders are external parties. Is that so? Is that so? Are shareholders external parties? Yes. You think shareholders are internal? Why? Apparently they are like internal parties. No. Internal means, guys, in accounting, the one and only internal party is management. They are the people who make decisions. Even the shareholders are a separate party. They just invest money in the business and see what happens. Management, right? Management is the management are the people. Managers are the people, or the director board are the people who are going to use those resources and manage the business. They are making decisions because shareholders do not make decisions. Shareholders do not make decisions, right? So they are also external. Who are the internal party? Management. Internal management are the one and only internal party, according to accounting. So financial accounting is not to provide information to internal management. Even they can use, but the main purpose of financial accounting is to provide information to external parties like shareholders, financial institutions, right? Likewise, especially the external parties who provide funds to the business, right? When it comes to management accounting, guys, management accounting, now let's say here, now if you are a shareholder of a particular company, let's say ABC company, you are a shareholder, you have as general public, you have purchased shares of that company. Now you are very keen on the profits of the business. If the company incur losses regularly, you have to withdraw your money and invest in some other companies, right? So you need which information? You need profit related information of the business, revenue, expenditure, profit, right? That information need should be fulfilled by financial accounting, by providing reports, different types of report. We will learn these things later, right? Now, management accounting is not for that thing. Management accounting are not for the general use. Management accounting reports are prepared for the use of the management. For example, if they want to make a decision that whether they are going to invest in another project or a company or whatever, they will evaluate the benefits, they will do calculations, and they will make a report to the management of the company, right? Suggesting whether they are going to, proposing whether they are going to invest in a new company or in a new project, or are they going, whether they are going to reject that thing, right? Reject that project or company, right? In that case, the reports prepared are called management accounting reports. Those are used only by, those can be used only by the internal management. Not everyone can see those reports. Those reports will not be published. Financial accounting reports should be published, definitely. But management accounting reports will not be published, will never be published. Those are only for the use of managers, only for the use of internal management, director board, right? For them to make decisions, they need some reports, secret reports. Those are management accounting reports, right? So management accounting provide information to whom? Internal management, right? Now here in financial accounting, guys, since these financial accounting reports are for the use of general use, is for the general use, everyone should be able to understand. Now if you are a shareholder, you should be able to understand whether they are having profits or losses, right? And you should be able to compare with another companies as well. When you are going to decide whether I'm going to invest in this company or this company or this company. So all the reports should be able to compare, no? Should be compared. For that thing, with that purpose, it is suggested that financial accounting reports should be in a standard format. Every company should prepare financial reports. Those reports should be in a standard format, standard template. So guys, financial reporting, financial accounting, right, is affected by different types of laws, and not laws, not only laws, right, different types of standards. There is a common structure, right? There should be a common structure, so that everyone can understand these reports and compare these reports with other companies. So the financial report of one company should be compared with another company. So for that thing, the reports of both companies should be in common template, common standard. So these financial reports should be prepared based on different types of regulatory frameworks and conceptual framework, different types of frameworks. Frameworks means, guys, we will learn these things in depth in the subject later, right, as separate lessons. Now, these financial reportings are governed by standards like IFRS, IAS. IFRS means International Financial Reporting Standards. We have standards to learn. When we prepare financial reports, we have to follow those standards. We cannot do as we wish, right? As we wish, we cannot do. We have to follow those standards. We have to follow those frameworks, regulatory framework as well as conceptual framework. We will learn these things separately, right? Now these are regulations, right? These are rules. Conceptual framework is not a rule. These are the principles. We normally follow those principles when we perform financial accounting. When we prepare financial reporting, when we prepare financial accounting reports, we follow those principles, right? That set of principles are called a conceptual framework, right? These are rules, right? So guys, financial accounting is called general purpose financial reporting. It is, those reports are prepared with the general purpose to provide information to anyone, any external party, right? But here, these reports are with a special purpose. We prepare those reports with a special purpose to provide information only to the management. That is called special purpose financial reporting. Special purpose financial reporting. Now, when it comes to management accounting, guys, those reports are only for the use of management. No? So management know everything about the business. No? So there doesn't need to be any common structure. They can understand whatever, right? Now, the management accounting report of one company is different from the other companies, right? Because it depends on the context. No? It is very situational, right? And since those are not published, No one needs to compare with other companies now. So there doesn't need to be any common structure. So they can prepare their management reports as they wish in their own template, right? In their own, using their own standards. So there is no any common structure. So no rules and regulations are there. No frameworks are there. There is no framework to follow. There is no rule or regulation to follow in management accounting. But here, two types of frameworks are there: regulatory framework and conceptual framework, right? So guys, this is the difference between financial accounting and management accounting, right? So I have listed down the basic differences, right, in this way. When it comes to users, management accounting reports are used by internal management, but financial accounting, external parties, no? External parties. When it comes to focus, management accounting reports, when it comes to management accounting reports, now managers are making decisions about the future, no? About the current situation and the future. So those information are current and future oriented. But what financial accounting reports provide is information with regard to the past of the or history of the business. How much have they earned as revenue during the last year, right? What is the profit of the last year? What is the revenue of the last year? What is the cost or the expenditure of the last year? Historic information. So financial accounting always provides historic information. But here, management accounting provides always current and future information, right? Rules and regulations, I told you, financial accounting. When it comes to financial accounting is subject to rules and regulations. But here, management accounting is not subject to rules and frameworks or regulations, right? Again, types of information provided. When it comes to financial accounting, guys, they provide only monetary values, monetary information, profit, revenue, expenditure, those things. But when it comes to management accounting, even the non-financial information is provided. Even the non-financial information, right? Those information cannot be measured with monetary terms, right? It may be quality of products, right? Quality of the workers, right? That way. Now, the last one, time frame. When it comes to management accounting, guys, right? Now, time frame means when do you prepare the particular report? When it comes to financial accounting, those are periodic. We annually prepare financial report. Annually prepare, sometimes monthly prepare, quarterly prepare financial reports. When it comes to management accounting reports, those are prepared, right? When the requirement comes to the context, when that is needed, right? Simply when that is needed. Management reports are prepared when management is going to make a decision, right? Like whether we are going to invest in a company, invest in another project or somewhat like that, right? In such a situation, they prepare management reports. So they don't need to prepare management reports. So they need to prepare management reports when it is needed, only when it is needed, when that requirement comes. But when it comes to financial reports, those are periodic. They need to prepare financial reports periodically, monthly, annually, quarterly, likewise, periodically, right? So these are the differences between management accounting and financial accounting simply. So guys, with that, we can wind up our first lesson, which is purpose of accounting.